Exceptional story. Pursuits by Skoda. Only on Bloomberg Quint.
Hello and welcome to Bloomberg Quint. Well, NALCO has reported December quarter numbers. EBITDA performance has been good enough on year-on-year basis, but then we have seen a dip coming in on sequential basis for the company. To join us to take this discussion forward is the management of the company, Mr. Chand, the CMD of the company. Hello and welcome to Bloomberg Quint, sir. I'm going to quickly start off by asking you the sharp decline that we've seen in the EBITDA performance of the company, as much as 40%. What explains the decline that we've seen in terms of the operational performance of the company?
Yeah, if you see the operational performance of the company compared to the last year, we have got a operational profit of 389 crores as against 220 crores of last year same period. So it is a strong growth. But as far as compared to the last quarter, second quarter, there has been a decline because, as you know, that prices in the LME, aluminum prices and alumina prices both have come down. So that was the main reason why this has gone down. And also there has been some increase in the input cost. Both the things have combined to bring the EBITDA down. But still the EBITDA performance has remained at 22%, which is also a good number as compared to the last year's of average 17 to 18%.
Sure. So I'd like to understand a little bit about the input pressures, because the cost of production has been higher this quarter around. I'd like to understand what are the pressures going forward that you'd foresee in quarter 4, and what kind of margins are you expecting to deliver going forward in the next quarter and FY20 as a whole?
Yeah. As far as this quarter 3 is concerned, in quarter 3 there has been some increase in the input cost, particularly the caustic soda and petrol coke. Both the prices are around 10 to 15% increase. That has given a cost impact of around 75 to 80 crore. In addition, we were having some problem in getting the coal from Coal India, so we were shut down 2 of our power units, and we have been taking power from the state grid, where the power impact was around 40 crores. So these things combine to have its impact. But in the fourth quarter, we are expecting a relief because the coal position has improved, and we have stopped taking coal from the state grid. So there we will get an advantage of around 40 crores. And input prices compared to the third quarter, it has by and large peaked. So we don't see any further movement from this position. So input cost will remain as it is. So therefore, fourth quarter, this relief will be coming, but concern remains still due to LME prices for aluminium and also alumina prices. Both the prices have come down very significantly. So, but we expect that with the uncertainty in aluminium market going away by lifting of sanction against RUSAL, the markets will come down to its fundamental, and in that case some kind of price firming may take place. So we are expecting that in fourth quarter, taking together, we will be having a net profit of somewhere around 1670 to 1700 crores, and the EBITDA margin of around 22 to 23% for the year as a whole from 2018-19. And the 2020 as such is to be seen, because if we open the coal block, which we are planning in 2019 third quarter, so in that case that will be a game changer, and there will be a significant increase in the profitability, because we are likely to get a advantage of around 500 crore from the coal itself if our coal block is open.
Sure, Mr. Chand, that was precisely hits, touch bases about all the points that I was wanting to know. But then there is something additional that I'd like to understand from you. First, I'd like to clarify if you spoke about the price hike coming in from aluminium or the alumina division going forward in the next month. Or also, I'd like to understand where do you see alumina and aluminium prices going forward for the remainder part of this calendar year, given that RUSAL's commentary so far, the uncertainty is now out of the way?
Yeah, as far as aluminium prices are there, you'll see that there has been a significant decline, and it has come down to a level which is now at the critical cost level. And below that much means many of the smelters will become completely non-viable, and we don't expect that further down it will be going. But the main reason which was there for decline of the prices was wait and watch approach that the customers were taking, because seeing the uncertainty in the market. Now that the RUSAL uncertainty is over and some kind of trade talk between USA and China have started, so the much of uncertainty in the market is slowly petering out, and that will bring some kind of stability in the market. Once this stability is there, there will be buying by the customers will start, and that we are expecting that some kind of positive uptick it will give as far as aluminium market is concerned. And once the aluminium market gets a positive uptick, similarly also alumina market will get, because there will be demand from the smelters. So we estimate that maybe this aluminium prices may move somewhere between 1870 to 1950, around $80 band it will move. And alumina prices maybe from 380 to 425, 450, like that, this range, this will be moving. And if the prices move in this range, then it will be to a great extent, it will give some kind of relief to the aluminum and alumina producers.
All right, sir. Sir, also I'd like to understand a little bit about the last prices at which the aluminium orders were booked for. If you could give us a ballpark range on that.
We do global tender for alumina and aluminium. As far as alumina is there, the last tender was around 385, 390, in that range it came. And aluminium follows the LME, and premium is tendered out, and this premium has come around $65 to $70. So we can say that right now alumina prices are somewhere around 380 to 390, in that range it is moving. And aluminium is LME price, whatever it is there right now, 860, 870, 1870, that it is moving with a premium of 70. That means 1940 total realization. That is the range at which it is there.
Sure, sir. In that case, sir, just the last question that I have for you. I'm sure you're also running out of time. Realization, they increased as much as 3% sequentially in this quarter, despite the LME prices fall that we see, at least for the aluminium division. And however, they declined 15% sequentially on the alumina front. What can be expected going forward in Q4?
In Q4, we are expecting that EBITDA margin, which is there at around 22 to 23% in third quarter, it may come down to 16 to 17%. And unless the prices in alumina and aluminium both take a uptick, and right now the whatever trend is there, EBITDA margin may come down by 6 to 7%, and it will be somewhere around 16 to 17% up in fourth quarter. But overall, if we take the total year, then EBITDA margin, as far as our company is concerned, it will be somewhere around 22 to 23%.
Right, Mr. Chand, that's all that we have for you in that case. Thank you so much for talking to Bloomberg Quint.
Thank you.
Thank you, sir.